Just when we thought inflation was cooling off, boom, it's back and it's proving to be stubborn. And guess what? Trump's new tariff war might just make it even worse. So, what's really going on? Are these tariffs just a one time price adjustment or could they send inflation soaring again? Let's break it all down, whiteboard finance style. All right, before we dive into the tariff war, let's quickly cover inflation. So inflation is simply the increase in overall prices over time. This means that your dollar buys less stuff. Your purchasing power goes down. I've been talking about that on this channel forever. So one way we measure inflation is through the CPI or Consumer Price Index. So this tracks the prices of everyday expenses, so things like food, rent, gas, healthcare, and even that coffee you buy every morning. Hey, it doesn't make a difference. Just buy the $3 coffee. It's not going to make a difference. But CPI isn't perfect because it doesn't always capture real-world experiences like shrinkflation. So this is when companies reduce the size of products instead of increasing the price. So those chips that used to be 12 ounces is now 10 ounces, but the price remains the same. So the Federal Reserve or the Fed, it aims for a 2% inflation target. So this level is considered healthy because it keeps the economy growing without eroding purchasing power too quickly. But recently, inflation seems to be bouncing around way above that number, and there's a list of reasons why. So why is inflation still so stubborn 5 years later, even after COVID? Number one is still supply chain issues. Even though prices are significantly down, according to this chart, even though COVID is over, they still haven't recovered. So shipping costs surged during the pandemic and they've remained volatile. Geopolitical tensions like the ongoing Red Sea shipping crisis have added even more uncertainty. Number two are labor shortages. So there aren't enough workers in key industries like trucking, logistics, and manufacturing. So when businesses struggle to find workers, they raise wages to attract employees. But higher wages often lead to higher prices for goods and services. Number three is commodity prices. So things like oil, food, raw materials, they're still seeing price swings due to global instability. So for example, OPEC has cut oil production multiple times, causing gasoline prices to spike. And then finally, number four is corporate pricing power. So let's be real. Some companies are still raising prices just because they can. I'm not saying there's some grand conspiracy or anything like that, but if you look at industries with high profit margins, many companies have taken advantage of inflation fears to boost their bottom line. And just as inflation was starting to settle, along comes Trump with a new round of tariffs. Take a look at this screenshot right here. So if we look at U.S. long-term inflation views, they're the highest in more than 30 years. So this chart is showing you the 5 to 10 year consumer inflation expectations. So you can see here that in 2020, it started to spike up pretty seriously. It flattened out about a year later or 2 years later, and then now it's spiking back up due to all the tariff talks. If we take a look at this chart right here, it's talking about how the U.S. inflation has eased and it's actually remained a little bit sticky though. So remember, we're trying to stay at about 2%. That you can see the consumer price index is the black line, which CPI is highly manipulated, you guys. Come on, let's be honest here. They just changed the measurements around, such as housing, or they weight it differently. But if you look at the blue line, which is the federal funds rate, you can see that we went from ZIRP in basically 2009, 2010, all the way to basically 2017. We started to raise it. And then I remember in December of 2018, the market started to crash. So they started lowering again. And then you can see COVID, it went back to ZIRP. And now we shot all the way back up to about 5%. And now we're coming back down again. But the black line is what matters, even though in my opinion, CPI is somewhat manipulated. All right, so let's talk tariffs, the whole point of the video. So a tariff is basically a tax on imported goods. So when Trump slaps tariffs on, say, Chinese goods, American businesses importing those goods have to pay extra tax, okay? So guess what? Businesses don't just eat that cost. They pass it on to you, the consumer. So here's what happened last time Trump did this back in 2018, 2019. Prices went up, especially for goods like electronics, steel products, and household appliances. Businesses cut jobs or raised prices to offset the cost, which slowed down economic growth. So supply chains got even messier as companies scrambled to find alternatives, sometimes from more expensive suppliers. I worked at, well, I'm not going to name the bank. I used to do credit analysis, okay, to see if companies that we lent to were credit worthy. It's just like a credit check, but for businesses. And you can see in every report where they had to raise prices, this was back in 2018, 2019, they always just passed it on to the consumer. So this is 100% true. So this time around, Trump tariffs are even broader, believe it or not. So they're covering more everyday goods like computers, cookware, and even certain types of clothing. So that means prices are going to increase, and they could be increasing even higher than before. And inflation could stay elevated for longer than expected because of these tariffs. So there is a global ripple effect. This is not just the US, okay? You're probably saying to yourself, well, Marco, that's just a US problem, right? Well, tariffs don't just impact America. When the US slaps tariffs on other countries, what do you think those other countries are going to do? They're going to usually retaliate, right? So what does that mean? That means higher prices for American goods overseas, making US exports less competitive. So global inflation is going to creep up, and as businesses worldwide, they're going to adjust to increase those costs, okay, to make up the difference. So supply chains getting even more expensive are going to force businesses to rethink their sourcing strategies. So if we take a look at the OECD, that's the Organization for Economic Cooperation and Development, they've already raised its inflation forecast for 2025 and 2026 due to these trade war concerns. So countries like Mexico and Canada, major U.S. trade partners, are expected to see a noticeable impact on their inflation rates. However, if you take a look at this chart, there is one exception, which is China. So while the rest of the world is dealing with inflation, China is actually facing deflation, meaning their prices are falling due to weak economic demand. In some ways, China could help keep global inflation down by exporting cheap goods, but that depends on how severe the tariff policies become. So take a look at this chart. You can see that India is the highest on the left with 4.5% for their forecast for 2025. And then also the change is 0.3 percentage points higher. Mexico has a high jump of 1.1, Canada 1.1, UK is actually at 0, US is at 2.8 with a pretty high jump of 0.7%. But if you look at the bottom of this chart, you can see China, okay, they're actually down 0.5% percentage points. And if you look at the right over here in the blue, this is the forecast for 2026. And if you look all across the board, it's pretty much lower. So they do seem to be forecasting lower if you want to look at it from a year out. So a lot of this stuff seems to be very immediate. That's why a lot of these forecasts are up pretty high. But if you look at the change versus the prior forecast, they're still up. You see 0.6 for US, 0.8 for Canada. You have 0.3 for the G20, and then 0.5 for Mexico. It's still an increase, but if you just look at the difference between 2025 and 2026, they're lower all across the board, which is a good thing in my opinion. So here's a topic that I've made videos about in the past. It's called stagflation. So is stagflation going to be a risk? So stagflation, for those of you that don't know, is when you have a sluggish economy and high inflation. So the last time we saw this was actually in the 70s when the US got hit with an oil crisis. So when stagflation happens, the Fed is stuck. So think about it logically, you guys. If they cut interest rates to boost growth, they risk fueling inflation. But if they raise rates to fight inflation, they could slow down the economy too much, then they're risking a recession at that point. So they're kind of stuck between a rock and the hard place. I've been talking about this in Whiteboard Finance University forever. So some economists are warning that if inflation stays sticky while the economy cools down, we could be looking at stagflation scenarios. So this would be a worst case scenario for policymakers, businesses, and investors alike. So as always, here's my thoughts at the end of the video. Where do we go from here? Well, it depends on a few things in my opinion. Will businesses absorb the costs or pass them on to us, the consumer? So most likely they're probably going to pass them on to the consumer. They're going to raise prices. And this is going to fuel inflation even further, in my opinion. So are other countries going to retaliate? So if they do, expect more inflation worldwide and potential economic slowdowns globally. So is the Fed going to keep cutting interest rates? So we just had a Fed meeting yesterday at the time of this recording. But if inflation stays hot, think about it, you guys, they might have to hold off on rate cuts, and those predictions are becoming more and more likely. And that's going to keep borrowing costs high. So high rates, lower borrowing, lower stimulus, all that stuff, it may lead to a recession. We'll see. So bottom line, inflation, in my opinion, is still a problem because they adjust CPI, they adjust the weightings, they adjust the basket, they adjust all that stuff. And then tariffs could make it even worse on top of that. So be smart with your money. Subscribe to this channel. Hit the like button. Don't smash it. Don't destroy it. Just gently click it. And then obviously keep following me to keep building wealth. And share the videos, you guys. These take a lot of time and effort to put together. Thank you so much and have a prosperous day. Hey, next time you go to the grocery store, check out the size of things, okay? The prices are the same, but the bag of chips is getting smaller. The cereal is getting smaller. Everything's getting smaller. Shrinkflation, they have to do it, otherwise they have to raise prices. Peace.